All right, good morning. Let's go over today's trade plan. So after yesterday's breakout move to the upside, we expect buyers to be active on any pullbacks into support. And at this point, we have to realize that ES is setting all-time highs, so there isn't really any hard resistance up at these prices, right? So the pre-market resistance zone, 83.75 to 85 quarter, is based on the overnight session. And then on the downside, we have the gap fill, 78.75, prior V pocket, 78 quarter, and then the initial support zone is the breakout area from yesterday, which is 72 to 74. Below that, we have support at 70 quarter, 67 quarter to 69 quarter. Basically, all of those zones on the downside can now attract buyers on first test. And in a bullish market, even if the market looks short-term weak on the day time frame, typically it resolves to the upside, right? So when you're reading the market in real time, even if it looks, kind of scary or a bit weak coming into a zone, more than likely buyers will step in at the zone and reverse that short-term weakness. So you can actually use that short-term weakness as a good spot to enter the market. So if you get, for example, a minus 600 or 700 tick reading, instead of viewing that as a bearish indication, you can actually get on board on the long side and fade that minus 700 tick and look for a rotational move to the upside. Now at this point, after balancing for so long below 73, 74, and now breaking out above it, it seems like the market is set for a move eventually to 1800, and that's kind of the next big level that the market can now test. Now, of course, it doesn't all have to happen in 1 or 2 days. It may take 2 or 3 sessions or maybe more to get there, but that is the next big inflection point, and it seems like the market is headed there. So, right now the safer trades are going to be to be patient, look for a pullback into a support area, and then execute long over there. And as far as what we're expecting on the day time frame, if we come down to initial support, we can still make it up towards the initial resistance area. That would still be in play. But in the event that we get a deeper pullback, then that zone might be a bit too far, and the market might not be able to get there on the day time frame. It can still get there overnight or tomorrow, but on the day time frame there might not be enough in it. Now yesterday we saw that the volume was running about average. In the overnight session so far we're running above average volume, so it seems like we can still have a decent range on the day. And pull back to initial support, good spot to go long. If it goes a little bit lower, just accept the stop out and just re-enter on the long side. The only time we'll avoid that scenario is if it's very obviously clear that we're seeing a strong liquidation move to the downside, which is not the expectation at all. But in the event that that happens, then we might go a little bit conservative on location. It doesn't mean we're not going to take longs. We'll still take long setups at good spots, but we might go a little bit conservative and wait for a deeper pullback. That would be the only difference in the plan at that point. But right now, downside has potential to stop at 78 quarter. It's not really a big support area. It's the VPOC from yesterday. It's just one level at this point. There's not a lot of confluence at that zone. So, it could hold, but it's hard to lean against a level that was just created yesterday. 72 to 74 is a much better spot. It's just a matter of will the market pull back that much. And if it doesn't, then we'll have to read the market in real time, let the range get established, and then execute trades based on the intraday levels as well. So that's something we'll also consider. But the main upside target at the minimum is the overnight high on the day time frame, and if we can break out above the overnight high, then the 89.75 to 91.75 is a good upside objective to shoot for. And that's an area where we'll look to take profits, not necessarily short the market, because there is no hard resistance up here, right? So that's really the plan on the day. Let's see how we open. If you're watching the other markets, then you know, keep an eye on like the 74 to 79 in NQ. That's an area that's been in play for quite some time, and it's probably going to continue to be in play if we get a pullback there. We can expect buyers to be active. If you're watching the Russell TF, the main breakout spot from yesterday, the short-term balance breakout was around 1101 half. So that's a level, an area to keep in mind in the event that we get a deeper pullback in TF, which again is not the expectation, but if we do, then keep an eye on like 1100 to 1102 half or so. That would be a pretty key support spot. And then above it, we also have support in TF around the 1104 half to 1106 half area. So if we come down their first test, ES is also hitting support. Pretty good idea to look for a long setup. So that's how the market's shaping up. Let's see how we open, and we'll take it from there.